One big topic is prediction markets. You could have a situation, it is possible that your losses could exceed your income and yet your income from wagering, but you could still have to pay taxes. Why? Because of the 90% rule. If you use Kalshi and Polymarket, how your activity is taxed may be confusing for you coming into the next tax year. So it's worth talking about it. How should investing activity on prediction markets be taxed? This is a complicated question, and there is no specific guidance from the IRS on how this is to be treated. So we have to look by analogy in terms of how other things are treated. Now, if you trade on a prediction market that is held by a regulated exchange like Coinbase, they're going to issue a tax document at the end of the year, a 1099 of some form, which is going to classify how those transactions are handled. But let's talk about it now before ahead of time. When you engage in prediction markets, you're putting money down based on future activities. Now, these future activities, from an IRS tax point of view, we would kind of divide those into event-driven activities or financial market indicators or futures of the financial market's going to go. So event-driven activities would be like what's going to happen at a sports game, who's going to win an election, are there really aliens in outer space? When you bet on these sorts of event-driven activities, those are generally considered gambling or wagering activities and would fall under the gambling and wagering rules. Let me contrast those. If you are using prediction markets for an event, specific event, then that would be gambling. Gambling falls under certain rules and limitations. Basically, when there's gambling, you can only take 90% of your losses, and they're treated as itemized deductions. Right now, for 2027, individual standard deduction is $16,100, $32,200 if you are married, which means if you treat gambling losses as a deduction, unless you're already exceeding your standard deduction, you may not get any benefit from it. So that's called the standard deduction trap. The second problem or difficulty with gambling is that the amount of losses you can claim, first of all, you can claim 90% of those losses. And when that amount exceeds how much you actually had in winnings, then you can claim no more losses. So you're limited by how much winnings you have. If you're a terrible gambler, you get no tax benefit out of it. Second issue there is that then the rest of that income is treated as ordinary income. So it's taxed at your marginal tax rate. Now, this is a different treatment than what you have with capital gains. So if you're using prediction markets to invest and make wagers, if you will, on future financial amounts, that's considered more of a capital gains activity. If your prediction market is more related to the price of corn in the future, how high would the Dow Jones Industrial Average go, all these things related to financial markets, then that's treated more like a capital asset activity. And it gets complicated, but generally there are significant tax rules that come to bear. Now, capital gains has some interesting treatments to it. One thing is you can claim all your losses, and you're not limited on your losses. So you're limited on how much you can claim in a year, 3,000 of net losses in a year, but the remainder can roll over to future years. This is very good. Also, you have the benefit if there's a long-term investment, you can get lower tax rates, and all your transactional costs can also be written off against the cost basis as well. So, if you are spending a lot of time and energy in prediction markets, especially if they're related to event-driven activities, you need to really recognize that you might have some complex tax situations. All of this is still gray area. It's not hard and fast from an IRS guidance point of view, but in terms of tax philosophy, I think this is how we should look at it. We'll have much more content on this in the future. Please send us any comments and questions you have about unique situations so that we can tease out those answers for you.